Pros and cons of interest-only mortgages. The main advantage of an interest-only mortgage is that the borrower can save a lot of money in the short term. The borrower does not have to pay the principal for the first few years, which means that the monthly payments are lower. This can help the borrower to afford a more expensive home. Some other advantages include lower initial payments. One of the primary advantages of an interest-only mortgage is that it offers lower monthly payment during the initial years of the loan. This can make home ownership more affordable, especially for borrowers who are on a tight budget or those who want to allocate their cash towards other investments or financial goals. Another advantage is increased cash flow. By paying only the interest portion of the mortgage, borrowers have more cash flow available for other purposes. This additional liquidity can be used for various purposes such as investment, debt reduction, home improvements, or savings for emergency. Another advantage is flexibility and control. With an interest-only mortgage, borrowers have the greater control over their cash flow and can choose how to allocate their funds. The flexibility can be advantageous for individuals with irregular income or those who expect their income to increase significantly in the future. Another advantage is investment opportunities. Borrowers may opt for an interest-only mortgage to free up funds for investment purposes. By making lower monthly payments, they can potentially use the extra cash to invest in higher return opportunities such as stocks, businesses, or other real estate properties. Another advantage is short-term affordability. Interest-only mortgages can be useful for borrowers who anticipate a significant increase in their income within a few years. For example, someone who is starting a new job or career and expects his salary to rise considerably may find an interest-only mortgage beneficial in the short term, allowing them to manage their finances more comfortably. So what are the disadvantages of interest-only mortgage? Well, the main disadvantage of an interest-only mortgage is that the borrower will end up paying more interest in the long term. This is because the borrower will only be paying the interest for the first few years. After the interest-only period is over, the borrower will have to start paying the principal as well. So other disadvantages of the interest-only mortgage are higher long-term costs. While interest-only payments provide lower monthly payments initially, once the interest-only period ends, borrowers may not be eligible for interest-only mortgage and borrowers may stop making principal payments. This typically results in higher monthly payments than with a traditional mortgage. As a result, the total interest cost over the life of the loan can be significantly higher. Another disadvantage is limited equity build-up. With interest-only payments, borrowers do not make any progress in paying down the principal balance during the interest-only period. This means that equity in the property does not increase unless the property value appreciates. So the lack of principal reduction can make it challenging to build equity in the home, limiting the potential for future borrowing power or profits from selling the property. Another disadvantage is risk of negative equity. If property values decline during the interest-only period, borrowers may find themselves in the situations whereby the outstanding loan balance is higher than the property's value. This is known as negative equity. It can make it difficult to refinance the mortgage or sell the property without incurring a loss. Another disadvantage is refinancing challenges. When the interest-only period ends, borrowers may face challenges in refinancing their mortgage. Lenders can require a substantial increase in monthly payments, making it harder for the borrowers to qualify for a new loan or find a suitable refinancing option. This lack of flexibility can lead to financial strain or a higher risk of default. Another disadvantage is interest rate risks. Many interest-only mortgages come with adjustable interest rates, meaning the rate can change over time. So if the interest rate rises significantly when the interest-only period ends, borrowers may experience a significant increase in monthly payments, putting a strain on your finances. Lastly, we have limited eligibility and availability. Interest-only mortgages are not as widely available as traditional mortgages. Lenders may impose stricter qualification criteria and require a larger down payment or higher credit scores. This limited availability can make it challenging for some borrowers to access interest-only mortgage options.